everyone, and welcome to this week's Motor Trade Radio podcast, powered by eBay Motors Group, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Well, I think, what about you, Curtis? This week was running the risk of two headlines again, the way it's continuing. So hopefully the listeners enjoyed last week's podcast where we kept to the two big stories and big topics of the week, but could have done that again this week. There's still so much going on.
Well, you know what, Phil? It's pretty much the sequel, isn't it? This is part two to last week's show because, as we predicted last week, there's plenty of updates on those two big stories, the ICE ban and Pendragon as well. So I think the best way to approach this show is to concentrate on the sort of breaking stories in the first half. And there's a lot happening in the used car sector at the moment. So first half of this show, we'll look at used cars. And then second half, we can do the follow-ups to the ICE ban because there's been a lot of coverage since we went out on Saturday about further ramifications, further comments on the ICE ban, and likewise Pendragon, because there's another horse that's joined that particular race, isn't there?
Yeah, I think credit to Tristan at Auto Retail Network that said technically making it a 4-horse race.
Yes,
we will get to more of that later on in this morning's podcast because there's potentially more changes being predicted on the horizon for that one, isn't there?
Yes, definitely. Now, during the week, we did catch up with Derren Martin, who gave us the lowdown on September's used car values. So we will have an extract from that in this week's show. And if you haven't heard the full interview, it is available on your podcast feed as a standalone.
Motor Trade Radio podcast, powered by eBay Motors Group.
Headlines this week are from Motor Finance, Car Dealer, AM, Motor Trade News and Reuters, starting with used diesel sales and prices set to rise following PM's ICE ban extension. Do you see how it's filtered its way into the first story this week?
Can it really?
Car Dealer asks, what will happen to used car prices in 2024? EV buyers consider switch to petrol and diesel as a result of the 2035 ICE ban shift. How the ICE ban may stall car maker investment. And we've already alluded to what's happening with Pendragon. So AutoNation joins the Pendragon bidding war. Pendragon wants £260 million Pinewood High Court action dismissed. And we'll finish this week's show with the latest financials from Pendragon and Arnold Clark. But we'll start this week with an extract from that chat we had with Cap HPI's Derren Martin, who gave us the lowdown on how used car values performed over the course of September.
Thinking about the month then, so the headline trade values at 3 years 60 have fallen 1.9%, and if I'm correct, that's equivalent to about £420, and that was on the back of a 2% drop last month of approximately £390 for the month. And what do you believe has driven this drop in value, and how does this compare to previous sort of September's into October markets?
It's actually the first downward movement we've had in September since 2016. And you've got to go back to 2008 for anything this sort of severe for a September drop. So we've had upward movements or level book for the last few years. September is, I guess, the main reason for values coming down is that the volumes have increased in the market and demand isn't great. It's not bad. And in a way, the wholesale market is actually performing okay, but prices are still coming down. And I think that's off the back of them still being high, 25% or so higher than where they were 2.5 years ago, because we've had those really strong years. So vendors are mindful of more vehicles coming back as new car registrations increase, and they're just sort of adjusting their prices, and dealers aren't looking to overstock. So they're not buying in bulk, they're buying in sort of manageable numbers. And as volumes increase and prices are high, it just means that there's a little bit of a realignment going on. But yeah, it's been almost 6% over the last 3 months now. So that's a fairly sizable chunk coming out. But values, as I say, are still 25% more than they were 2.5 years ago. So it's a little bit confusing as to why values are coming down, because the market doesn't feel too bad and dealers are still buying, but it is obviously supply that is causing that as new car registrations get back to more normality.
Well, some interesting insight there from Derren, as usual. And so down 1.9%, which equates to around £420, doesn't it, for the month?
Yeah, I think the key message from Derren there is, I mean, the values are falling. They're predicted to continue to fall through the rest of this year. The big question is probably going to be what is happening now into 2024, which actually is, one of our stories they're going to be talking about this morning. But it does also talk about that we are heading into potentially an oversupply market as consumer demand slows, but product starts to come back quite heavily into the fourth quarter. So trying to err on a bit of caution, and probably to the same point as we talk about every time with Derren, the values are still at a very high point compared to pre-pandemic levels. So yes, they're falling, but they are falling from a very high point.
Yeah, and definitely worth catching the full interview, because Derren does go into detail. I mean, we do talk about the various moving parts that go into any given month, but he had a lot to say about what dealers are actually stocking, the sort of vehicles they're looking for at auction, and some interesting observations on how the month panned out, especially in the franchise sector, which obviously we had the plate change, and did that impact prices?
Exactly, and keeping on that same point, following the PM's decision to defer the ICE ban, that there's a story that we're starting off with here in Motor Finance Online, and this is used diesel sales and prices set to rise following PM's ICE ban extension. And this is that the sales speed of used EVs continues to rise according to Indicata. So this is some research by Indicata in their latest market watch, which basically say that they saw used diesel car sales fall to a record low in August, whilst used petrol sales rose to 54.6%, and hybrids and BEVs comprised 22.5% and 6.6% respectively. So some interesting findings here from John Mitchell at Indicata.
Yeah, definitely. So, as you say, diesel accounted for just 16% of cars sold in August. But with the move, the shift, or U-turn, call it. In fact, let's call it a U-turn. That's what it is. But this could all change. Diesel could be in more demand now, and we'll need to look at this on a month-by-month basis over the coming months. But yeah, you're right. Some interesting comments here from Indicata, because they actually say new car diesel sales have only fallen in recent years due to the 2030 deadline, but they're suggesting we could see sales of new and used diesel cars rise now that the ICE ban has been moved back to 2035. So Indicata go on to say diesel engines for many customers still offer the best combination of fuel economy and practicality, particularly with those larger SUVs, which are popular in the used market, and also with used diesel stocks falling in line with new car sales for a number of years. We could start to see demand exceeding supply, which will then push up prices. So we're going to have to keep a watching brief on this, Phil.
Exactly, yeah. And sticking with values, heading over to Car Dealer magazine, and this is a headline that is investigation: what will happen to used car prices in 2024? when will used car prices fall? And this is that a car dealer have been speaking to a panel of used car pricing experts about what will happen next. Will used car prices fall in 2024? Why are used car prices so high? And finally, they asked the experts on their thoughts on the complicated used car market. So there's been quite a few spokespeople in this one, and one of them being obviously Derren, which if you do listen to the whole interview on the podcast there, he does talk about where he expects the market to maybe head in 2024, doesn't he?
He does, yeah, because in our conversation with him, as well as a conversation in Car Dealer, he does make a point that those missing 2.3 million, 2.4 million cars that didn't come into the new car market because of the way registrations were impacted by the pandemic, they will start to be noticed more and more from next year, because they're the 3-year-old cars that aren't coming back. And he actually thinks that that might see used values actually increase in 2024, having sort of gradually come down over the course of certainly the back end of this year. We could start to see them increase. I don't think he's talking about big increasements, but there's still a lot of normalization to play out in the market.
Yeah, true. And Phil Jones, Chief Operating Officer at eBay Motors Group, does agree with the comments around the supply issues that's seen through. Obviously, we talked about COVID and the production shortages through the COVID period, and directly after the pandemic, and been having a big impact on next year, because these, as we always say, those new cars were never registered and they're never coming into that used vehicle marketplace, and that's just compounded year on year on year until we get back to some kind of normal annual registration marketplace. But again, we're still playing into the EV market at the same point there, aren't we?
Yeah, definitely. And I noticed one of the commentators actually said that they're expecting 40% fewer 3 to 5 year old cars in circulation by the end of next year compared to the end of 2019, so that pre-COVID period. So that really does put it into context, and how that will impact used car values.
Yeah, and interestingly, Rupert Pontin, who's director at the data specialist at One Auto API, actually says that he thinks used values will fall next year. So I was saying that used car prices in 2024 are likely to see a return to pre-pandemic depreciation with gentle monthly downward movement. So again, it's this balance now, this supply and demand. We've got a lot of cars, a lot of appetite from the OEMs. It's only days till the end of September, and then we'll just have to wait until next week's Saturday headlines to see where the September market finish, which will give us a key indicator of the amount of push volume that's been put into the market and what impact that will have for the remainder of the year and into next year.
Yeah, I'm particularly intrigued to see how that split between retail and fleet will be looking for October, especially with the plate change, which traditionally strong time for retail sales. But you'll hear all about it on next week's podcast.
Yeah, let's see if we get back to the days where sort of 70-80% of the cars are registered in the last 3 trading days of the month of September that we have experienced previously. So we'll watch that one.
And in fact, one of those days is going to be a Saturday, isn't it? So
just put added pressure on the taxation, and Apple will probably crash. As it always does on the last day of a significant month and time.
Definitely. So after the break, we'll have all you need to know about the impact of the ICE ban announcement and the latest developments on who's buying Pendragon.
You're listening to all the chatter that matters on Motor Trade Radio, powered by eBay Motors Group. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand wherever you are on your podcast feed.
So the first story is from Motor Trade News, and the headline there is EV buyers consider switch to petrol and diesel as a result of 2035 ICE ban shift. So this is a particularly interesting one. It's based on new research by eBay Motors Group, and I did work with the guys there on this story, and it's actually fascinating because what they did was they launched the latest consumer insight panel actually within a day or so of the announcement. So this is pretty much hot off the presses. So this is the views of just over 2,000 car buyers on what the change will mean to them and their buying patterns. And it actually found that 40% who are currently searching or planning to buy an EV within the next 6 months will now either delay purchasing, buy an ICE car instead, or transition when forced to. And this sentiment was actually most acutely felt by buyers aged under 45, so it was 37%, rising to 41% for the younger buyers aged between 18 and 24.
Yeah, and I mean, it's one of them, isn't it, that I don't know. I mean, we'll get onto it a bit later as well. I mean, the U-turns, as you put it earlier. I don't know. You gotta feel sorry for the consumers, haven't you? As
Yeah,
to,
yeah.
what they do, what decisions they make. Do they transition to electric and start to work out how they live with a battery electric vehicle. Get ahead of the transition and get ahead of the deadlines, and the manufacturers are trying to do exactly the same. But again, I mean, as you say, they're hot off the press straight after the announcement. Does kind of say where consumer heads are at in terms of their purchasing decisions, doesn't it?
Yeah, and some of the stats are really quite revealing because overall the change of the date will change the purchasing behaviour of less than 1 in 3 car buyers, so 31%, and that's actually despite the fact that most car buyers, 61%, agreed that the adoption of EVs is an important part of the government's commitment to reach net zero by 2050. So buyers understand the importance of EV, but when it comes to their next purchase, they're going to go with what's best for them personally. And you can't blame them, can you, really?
No, and Lucy does finish off with a nice comment to say that the shift to 2035 comes at a particularly challenging time for EV sales, with retail demand cooling in the new market and used buyers hesitant over exposure to price drops. That they worry that the change will add a further layer of uncertainty for buyers and dealers, and that kind of sums up the uncertainty that this raises in the market now.
Yeah, and we'll return to the theme of uncertainty in our next story because it's from Reuters, and the headline there is UK's fossil fuel car ban delay may only stall investment. Now, this is quite an interesting story in that it's from Reuters, so it's very much giving that sort of international perspective on what's happening in the UK to a global audience. So they do sum up what led to the change of the plans, why it was moved back, the politics behind it, and it is actually quite revealing, isn't it?
It is, yeah. I mean, I was interviewed for this just to get a view on one around how pragmatic the decision was in terms of that 2035 deadline, aligning with Europe, and potentially it should have never been brought back from 2040 to 2030 in the first place. But again, you start to talk to the market, and it's clear, trying to point out, and it's highlighted in the story that it's definitely a political move. ahead of the forthcoming election and after the by-election result there, that these decisions have been made for the wrong reasons, and clearly trying to point out that there's been a lot of investment in the UK automotive sector on the back of the 2030 deadline being so early and so close that it did entice investment, and that starts to question future investment. People will say, well, is it going to change again? Do we invest? When do we invest? And things like that. So it was quite an interesting one talking to Reuters about this, that if it had been done any other time, nowhere near an election, it may have been perceived differently. But
Yes.
clearly,
Yeah.
because it was so close to an election, it was perceived as a potential curry vote, and trying to sort of work around an election point going forward.
Yeah, and also quoted in this story is Andy Palmer, who is very much, he's the go-to industry commentator. I mean, very high profile, former CEO of Aston Martin, also from Nissan. And he says, in Britain, there's no industrial strategy, no intent for industrial strategy, and no desire for an industrial strategy.
Yeah.
So pretty damning there from Andy Palmer.
Yeah, and we'll get on to something else shortly as well. But obviously, trying to make the point around the we've got the rules of origin, which comes into effect next year, in 2024, and which could incur the 10% tariffs imposed on EVs between Britain and Europe. And in addition to that, we've got the ZEV mandate, which still remains in play. So 2024 is 22%, and there's a fantastic chart that you found, didn't you, in automotive news, Auto Finance Online, sorry, that they have sort of identified, and I was pretty impressed when you quoted it, Curtis, to be fair.
Yeah.
But it's, I believe it's been announced on Monday night of this week that the mandate that's in place remains. So the manufacturers have still got these mandates of percentages where their percentage share of battery electric vehicles need to be registered in the UK. And that hasn't changed in relation to the 2035 deadline.
Yeah, it's a curious one, this, Phil, isn't it? Because everything's changed, but nothing's changed, because the manufacturers still have to operate according to well, basically these quotas, these mandated quotas on the volume of EVs that they've got to sell every year, even though the government has moved the goalposts to 2035. And you're right. This particular story in motor finance did catch my eye, because for anyone listening, I urge you to head over to it, because it just gives such a useful breakdown of the percentages by year for cars and vans. And vans is particularly interesting because I haven't seen that expressed anywhere else before. And we kind of, vans tend to get sidelined a bit in the sort of rush to EVs, the rush to transitioning. But there's equal pressure on manufacturers to produce higher volumes of electric vans to fulfill the rules of the mandate.
Yeah, and as you say there, I mean, they've obviously got the rollout of the ZEV mandate up to 100% by 2035 for cars and LCV vans. But for cars, it remains at 80% by 2030. Or you could look at it another way, only 20% non-EV from 2030 onwards. And for vans, that's 70% or 30% non-EVs from 2030 till 2035. So, however you look at it, that 5-year deferment, there is still a big job for the OEMs to do to meet those deadlines, for them not to face significant fines for not achieving them in the UK. And it is, that alongside the rules of origin that's taking place, and we won't go into agency model on this podcast, Curtis. That's not enough to talk about this week.
Save that one for another day.
Yeah, exactly. But it does give retailers, consumers, OEMs significant concerns as we head towards that new target of 2035.
Yeah, definitely. And although this is the sequel to last week's show, I do get the feeling, Phil, that we will be returning to this topic fairly soon, probably next week, who knows. But moving on, the next headline is from Auto Retail Agenda. And this starts our sort of mini coverage on the Pendragon. So we've got a couple of updates on that Pendragon story. So cast your mind back to last week, and we were talking about the Lithia bid for Pendragon and the counter offer by Hedin and Penske. So this week, Auto Retail Agenda reported that AutoNation has put in a bid for Pendragon, which matches the existing bid from Hedin and Penske. So what did you make of this one?
Yeah, I mean, they've gone straight in, so they're obviously saying that they've joined the race, the takeover, with a 32 pence a share offer. And as you said there, Curtis, that does match the Hedin and Penske offer. And there's a lot going on. I mean, I listen to a lot of the commentary coming out of the US, and people talking about it significantly over there, and why are they looking at it? And clearly, when we speak to Steve Young on a regular basis, UK dealers still offer a significant value for US and international investors. The exchange rate is still playing in favour, and they're looking at these, global relationships between them and the OEMs. So, yeah, I think it's certainly going to be an interesting one, and it's I suppose it's which way. I mean, Bill Berman's probably sat there wondering what's going to happen next, because he obviously is ex AutoNation, isn't he?
Yes,
in his career there.
Yeah.
So I don't know. It's anyone's guess at the minute, and we've still got the old Pinewood software business playing a significant part of all these discussions and offers and negotiations.
Yeah, because it's interesting that these counter offers are for the complete company. We're not talking about Pinewood being spun off as it is in the Lithia deal. And I was intrigued by a comment that you mentioned, Steve Young, friend of the pod from ICDP. His comment on this new offer was that, okay, it's another offer. It's it's another hat in the ring, but he also suggests that maybe Group One, who of course already have a large presence in the UK, it wouldn't be beyond the realms of possibility for them to put in a counter offer. So again, plenty to play out in this story. Pendragon shareholders are set to vote on the Lithia bid on the 6th of October. So we'll be hearing about that fairly soon, but the other offers are still in play.
Yeah, keep an eye on this one. So sticking with Pendragon, but heading back over to Car Dealer, and the headline is that Car Dealer Group Pendragon wants 260 million High Court action dismissed, and this is the tech subsidiary Pinewood UK is facing a claim for alleged breach of contract. Its DMS reseller in the Asia Pacific region says that Pinewood UK rendered its business model unviable, and the allegation of fraud is being made, and that dealer chain is at the centre of the buoyant wrangle, and it's seeking to have the case thrown out. So it's quite an in-depth story here. That Car Dealer have pulled a lot of the detail from the the case and shared it in a story. So we won't go through it in masses of detail. But subsequently, I mean, obviously, with everything going on in terms of the offers for acquisition, this still lingers on in the background, which will add potentially complications on the deals, whilst this still remains in play against Pinewood.
Yeah, and it's no surprise that Pendragon wants the action dismissed, because it'll just make any future disposal acquisition a lot cleaner. It really will. But it is rumbling on, and as you say, Car Dealer, that they've run a very detailed background story on this, because I think they were pretty much the first publication to pick up on this legal dispute earlier in the year. So definitely head over to Car Dealer for the full story. We'll put a link on our newsletter that goes out on Monday.
And surprisingly, we're staying with Pendragon on our next story with AM Online. And this is profits rise for Pendragon despite economy woes. Now, obviously, they've had their trading update for the 6 months of the year up until the 30th of June. And that they've delivered a positive set of trading results, revealing a pre-tax profits rise of 10.6% to 36.4 million in that 6-month period. So that's a pretty good performance for the first half of the year for Pendragon.
Yeah, no, it's very good. So like-for-like revenues increased by 15% in what was a very strong first half, and came despite what Pendragon describes as challenging economic conditions, with pressure from higher interest rates and ongoing elevated levels of cost inflation. So it is. I mean, it's a strong showing. Interesting point here. I wonder what sort of impact this will have on any counterbids, because Pendragon is proving that it's had a particularly strong first half in what was potentially a challenging time for the sector. So that remains to be seen. But so in terms of new vehicle sales, they were up 18.3%, and very much in line with the total market, but ahead of the retail market. And in addition to that, new vehicle volume growth by gross profit per unit of £2,779 was actually up 8% or £203 compared to the same period in the first half of 2022. So, another good result there.
Yeah, and it's good that they've cited after-sales revenue as a good growth area for them in that trading period that was up 8.7%, up by 8.7%, an increase of 18.6% on a like-for-like basis, and further improvements in the gross margin of 20 base points to 51.5% against the first half of 2022. So again, putting in a good show and a good performance there, and comes at a very good time, doesn't it? As the bids come in to buy the business, I suppose. But again, we'll keep a close eye on that one. But remaining with financial results and the final story of today, we're going over to Car Dealer again, and this is that Car Dealer Group Arnold Clark's profits tumble for 2022 as increased costs take their toll. And this is that the pre-tax profit of UK's largest independently owned family car retailer dropped by 34%. The Arnold Clark's made 173.5 million before tax last year versus 263 million in 2021. That's what the accounts are now showing, that revenue went up by nearly 4% to almost 5 billion. So I think in context to this, Curtis, and just looking at those numbers, I mean, we've got to remember how strong 2021 was for somebody like Arnold Clark's, with the used vehicle values increasing and not decreasing, so you don't get those depreciation costs coming across the business and write-downs coming across the business. We hadn't started to see the cost of living and energy hike quite yet in sort of 2021, and the retailers were making some good margins on new and used vehicles, weren't they? So I suppose it's a bit like used car prices. They come in probably down from a very high point. I mean, you can't forget, the 263 million in 2021 was a significant good performance. I mean, you wouldn't shy away from 173 million last year, would you, to be fair? But
definitely not. And yeah, you're right. Context is everything. So turnover was up 4% to just shy of 5 billion, as you say. And it's worth just adding, in terms of context, this was still the second most profitable year for the group. So profits were down, but it was still the second best on record. So it's an interesting one, this, isn't it? Because as the story points out, Arnold Clark, which does pride itself as being the UK's largest independently owned family-run car business. It's got 193 dealerships across the UK. It did sell just shy of 193,000 used cars and 55,820 new cars over the course of that period. So, they're still very, very respectable figures, aren't they?
yeah, again, I mean, trading very well, and they've made quite a few strategic decisions over the last few years, haven't they, in terms of brand representation and supermarket area representation as well. But also, they were also hit by the cyber attack, weren't they?
Yes.
In December of last year as well. So you can't forget they have faced some changes throughout sort of 2022. But again, putting in that kind of performance is still a strong performance, and as you say, the second best for them. So again, yes, fallen, but again, we know that the market is starting to soften, and a lot of stuff is falling from the heights of 2021.
Yeah, definitely. And we'll start to see some more half years and year ends over the coming weeks. So be interesting to see how they compare with both Pendragon and Arnold Clark.
That's it for this week. I mean, hopefully we've managed to cover not just the two main topics, with the Pendragon battle taking place as to the next owner of Pendragon, and the continuation of the outcome and the impact of the deadline deferment from 2030 to 2035. But we'll try and keep abreast of all that. And as Curtis said there, we suspect that over the sort of coming weeks there'll be more financials coming out from a lot of the dealer groups and how they're performing for either a full trading year or first half year trading of performance. So we'll keep you ahead of those as we get them.
Well, Phil, that was another packed show, wasn't it?
Yes. My voice is going, I think, now. It's Curtis. Must be all these shows trying to keep ahead of what's going on in the market.
Yeah, definitely. So we'll keep our eyes peeled on the media over the coming week and give you more on those stories and hopefully some new breaking stories. But that's all for now. Many thanks for joining us on the Motor Trade Radio podcast. Until next week, it's goodbye from me.
And it's goodbye from him.
You've been listening to Motor Trade Radio Podcast, powered by eBay Motors Group. We'll be sharing all the links from this week's headlines on Monday morning. So to make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.